All right, y'all. It's about 10 minutes after the hour, so I'm gonna go ahead and pass it over to Carmen so she can get started with the fundamentals. And once she's done, I'll go over the technicals for the week. It's all yours, Carmen.
Cool deal. All right, everybody. What I decided to do tonight was just pull up some articles um, and kind of talk through some of the things that are going on as far as the fundamentals are concerned that are not necessarily on the Forex Factory calendar, just so that you guys can get a good um, idea of what I'm thinking about and how you should also look at and interpret news that's coming out. Um, so the first thing I'm going to do is start with, um, actually, it's quite a bit, but I'm going to start with the Forex Factory calendar first. So um, on the Forex Factory calendar for this week, we have um, our usual news and then a little bit of extra stuff. So the very last thing that we're waiting for this evening will be the inflation expectations for the New Zealand dollar. How would you play this? Um, Pay attention to what the expectation is going to be for inflation. And if their expectation for inflation is um, lower than ours, so we're expecting 2%. If their rate of inflation is lower than ours, then you can um, kind of have it in your mind that going forward in the future, especially month over month and year over year, that our currency will essentially devalue slightly faster than their currency will. Um, and I say devalue, but when you look at how far you can stretch your dollar, our dollar won't stretch as far as theirs will. That's another way to look at it. So that's how you can anticipate playing the New Zealand dollar versus US dollar after that news comes out. It says tentative um, just because they can release this news anytime during the Sydney session. So anytime between now and like 1, 2 o'clock in the morning. Tomorrow, we don't really have a lot of heavy news. One thing I will just pay attention to and look at is the small business index. Um, this is going to be really important, especially as talks go on about the minimum wage, which is one thing that we're going to talk about. And then the other thing I'll also be looking at will be mortgage delinquencies. So as the stimulus packages kind of wear off and as Congress is trying to go through now and write new stimulus packages and get them passed, um, remember that the past two stimulus packages have had provisions for forbearance for mortgages. Some people were able to take advantage of that. Some people were not, based on income and how they wrote some of these 1,000-page policies. So, um, mortgage delinquencies is going to be very important because this is going to help us to see what the housing market is going to be like. Are there going to be a lot of houses being put on the market? Are there going to be a lot of people without shelter? And then, how are the banks going to deal with that? So, those are two items, even though they're not high impact, I'll be paying attention to those tomorrow. On Wednesday, consumer price index news. So, based off of what the New Zealand dollar news is tonight, you can compare this news item to the New Zealand dollar news item from tonight on Wednesday morning, and then you can kind of get a good idea for how to play the New Zealand dollar for the rest of the week because the CPI is a form of inflation news. Um, Also, Wednesday, we'll be getting crude oil inventory news. Um, Crude oil news now is going to be pretty important for us to be looking at because we're getting into what would be considered to be the start of the travel season coming up. More people are getting vaccinated. More countries are saying that they want vaccinations prior to people traveling. Resorts are starting to open based on COVID admissions and diagnoses now. So you look at stocks today, Disney was up about 5% or so off of that news alone. So um, the thing you want to see from crude oil inventories is that the number dropped. That's going to help us to know that, okay, oil is being taken out of these inventories. If the number is green, it's meaning that oil is sitting in these inventories or being added to the inventories. So even though when the number pops up, it's green, you don't want the number to be positive. You want the number to be negative for oil inventory. So we'll be paying attention to that, especially going into the summer. Oil is going to be pretty big. There have been a lot of just looking at the options market and the futures market, a lot of orders and contracts that are being put on oil now in the 60 to 80, mid $90 range, depending on if you're looking at options or futures. So um, people are expecting oil to go up by another $20 to $30. Also, remember that's going to affect you at the gas pump. So a $20 to $30 increase in oil could be easily another 30 to 75 cent increase in oil prices. So just keep that in mind. Yes, yes, when we're investing, we want these assets to go up, but just remember how it's going to affect you personally on the back end when you do so. So we'll be getting a speech from the Bank of England on Wednesday, as well as from Jerome Powell. So that will set up a good GU trade, not during the news, but after the fact, because you actually want the news to happen. You want to see which way the market is going while these bank officials are speaking, and then play the market after the fact, because those are going to be two very volatile news items, because it's not just a piece of paper that has a news item and it comes out. These are actual speeches. These are questions. These are times where people can ask questions, and sometimes they're like off the cuff. They don't necessarily get all of the questions ahead of time. So um, it's going to be, you know, um, freelance. It's going to be like, how they are able to interpret the question and answer it in that moment. For those of you who know and have followed Jerome Powell or have looked at his videos, looked at his speeches, you know he's grown a lot. He used to be a bumbling mess. He used to twitch. He used to fiddle. He used to every time he had a hard time answering his questions, it never failed. He'd take his right hand and move his glasses and he'd tap the podium. Like me and some of the other people that have been in the group for a while, we would laugh because he would always give a tell when he was having a hard time coming up with an answer. He's better now, but um he still moves and fidgets a lot. So if you see him fidgeting, if you see him wrestling with his papers, if you see him kind of moving his glasses around, just know okay, he's having to pull an answer out of his ass right now. That's pretty much the interpretation I have of whenever he does that, because a lot of the times it could be true, but you'll come to find at the next Fed meeting that they said something completely different or something slightly different. And when these Fed officials and bank officials are talking, like you listen and pay attention to their every word, sometimes versus all the time versus none of the time. Like those are three completely different um, market policies. Those are three completely different financial policies. And you might think, oh, some of the time, most of the time, all the time, oh, okay, there's only a slight difference. No, that could be the difference between $2 or $3 trillion, a sometimes versus a most of the time. Or even if, he slips up and says something on accident, yeah, we did. Um, but maybe it's something they're talking about. Those are things that have happened in the past, and the market has reacted off of those things. So these speeches are important. If nobody else, I would definitely suggest that everyone gets to know Jerome Powell. Get to know Jerome Powell, and also get to know Janet Yellen. So I asked the question in the group about Janet Yellen. Who really knew Janet Yellen? What her policies were like? What was she like? I will go ahead and tell you now. Like I appreciated the answers that came through, but the thing you need to look for is, what is a person's personality like? How is that going to translate in the marketplace? How are the news outlets going to see this person? Janet Yellen is very quiet. She's very timid. She doesn't like talk. She's like a little mouse. So when she does talk loud, and when she starts yelling, and when she starts beating or tapping her pen, like she's really adamant, she's frustrated, she is really trying to find a way to not like cuss the person out who's talking to her, because she will go from being like this really pale lady with like snow white hair to being red, and you're like, oh, like she's having some issues, like they should stop pressing her. Those things are important. Why? Because when Janet Yellen, she's now our Treasury Secretary. So when she's talking, when she's in front of Congress, when they're questioning her, when they're interrogating her during some of these hearings that they're, like literally, those are things to pay attention to, because the market's going to see that, and they're going to say, "Well, Janet Yellen turned red. Like she got really upset. She got really angry." How are the hedge funds and how are the banks going to see that? Oh, she had a difficult time. Oh, that question was really pressing, and it was something that the Fed and the Treasury really haven't dealt with. Um, and then as far as her policy making abilities when she was a Fed chair, like those are things like as time goes on we'll talk about, but those are things that are super important, because what was she like as a Fed chair? Timid. She was very quiet. She kind of rolled with whatever the president liked. That's not what a Fed chair should be. A Fed chair should be very independent, be able to stand on their own. And yeah, there were times where she could do that, but she was very reliant on other people because she was trying to make the whole system happy. She was trying to be that person who was kind of mending different government departments together, trying to help heal wounds. Like she was trying to be the peacemaker. And a lot of her policies ended up kind of backfiring, especially now, like when we talk about, what happened during, um, like after the downturn, we start talking about some of the pieces that had to be picked up during Obama's administration, some of the same banking policies that we're dealing with now, they're all because of her. They're all because of Alan Greenspan and Ben Bernanke and all of these other Fed chairs. Like I'm rambling on about Fed chairs because they're super important. Their attitudes are important. Their personalities are important. Their policies are important. And I want you guys to just really know that like it's something you need to pay attention to. Now, moving on. When Thursday. So Thursday we get the EU economic forecast. The thing that I'm looking for in the economic forecast is to hear how much of the debt that Spain, Italy, Germany, France, and Greece, how much of the debt that they owe, how much have they paid back? Because those countries paying back their debt is going to actually help the euro to um, bump up their interest rate. While it might not be a positive thing whenever you think about it, you're increasing interest rates. A lot of people say, well, you're increasing inflation. Why would you do that when we're still kind of sort of in a pandemic? You got to realize the euro has a negative interest rate, and they're not a safe haven currency. That's not a good thing. When you have a negative interest rate as a currency, that means that you have a lot of shit going on. sorry, excuse my language, you have some problems. You have a lot of problems, you have a lot of issues, and you haven't been able to resolve them. You got all these countries that have debt that couldn't pay them back last year or had to take out more money that now have had to go in and do a restructuring plan with the central government. So I want to hear how much of that money have they paid back? How, like, when do they plan to pay it all back? Um, are they paying back any interest? Because that wasn't released yet. Have they been working cooperatively with the UK as far as importing and exporting items across the border? So I want to hear all of those things. And as far as the USD with the unemployment claims, we kind of talked about that on Friday, but definitely wanting to see unemployment claims drop. But I want to see them drop because people have found jobs, not because people quit applying. And that shows up in the report. So that's another thing to look at with these unemployment claims. Just make sure that it's not people who have just timed out, which means they've maxed out all their benefits, or they just decided to stop looking um, for a job. And on Friday, we have preliminary GDP numbers for the UK. So these are going to be super important because, we're talking about the GDP. This is going to be GDP quarter over quarter. So this is going to account for Brexit being over. This is going to account for some imports and export exchanges that have been done um, through the heaviest part of the pandemic for them, and then coming out somewhat of the pandemic. So those are going to be pretty important. So on to some of the items that I wanted to talk to you guys about. So this very first one, I don't have a tab pulled up for, but it's for minimum wage. So everybody has their idea about minimum wage. Most people have a perception of minimum wage in their head right now. Either you're an employee, you don't make $15 an hour, and you're thinking to yourself, I want to make $15 an hour because that will help to bring more money into my household. I can pay bills, I can do this and that. Or you're indifferent, you don't care, or you're a business owner, or you're in economics and you're looking at this whole situation like, why would we pay out minimum wage at $15 an hour? That's just going to cause a whole lot of issues. So um, with minimum wage at $15 an hour, one thing I want you guys to do is go to the Department of Labor. Go to the Department of Labor and look up how many times we've had increases to minimum wage. A lot of you will look and say, oh, wow, we haven't had a lot of increases to minimum wage. The last time it was increased was like 11, 12 years ago? Probably like 12 years ago. And you'll probably say, oh, gosh, like it's time for another increase. Well, when you look at where we are as a global economy, so like every country on the planet, like what are we all going through right now? COVID, coming out of a somewhat of an economic downturn, don't really have a lot of people working, not traveling, economies aren't as stimulated as they used to be. So, what will $15 an hour do? A lot of people see corporations when they see $15 an hour. $15 an hour, a lot of people say corporations make billions, they're making all this money, and they should be able to pay out this minimum wage. But what they're forgetting is that there are small business owners who will have to pay out $15 an hour. And so you'll end up, when we look at these unemployment claims numbers, it becomes important when we talk about minimum wage, because if companies start letting people go because of the minimum wage, that number is going to go up. You're going to have people flooding the marketplace because jobs decided to let people go because it was too expensive to keep them on board. So I had written out a statement. It was a comment on someone's post, and it just kind of sums it up. It says, to his point, as a small business owner, $15 an hour is not sustainable for business. You have to sacrifice quality of the product or service, aka cutting staff of the business. Prices of the items increasing is because of inflation. So this is everyday items increasing naturally without raising unemployment. So everyday items are increasing every year about 2% year over year. The cost of these items increase even more so with minimum wage because of how economics works. The labor cost is factored in and is calculated with the cost of the product. That's why American products tend to be higher because wages are higher. Every time the minimum wage has been increased, the item's price has been increased in addition to the 2% of inflation. So, in this person's example, they were trying to figure out, like, um, if two people in a household are getting paid $15 an hour, that's $30 an hour going into that household. So I said, in your example, companies will try to find a way to cut costs to keep the price of products manageable, which will mean cutting jobs and moving into automation. So it's possible that only one person will be making $15 an hour, but even if both do, prices will increase and eat into that salary increase. It's economics, not being mean. Most corporations have debt, and a lot of people don't realize that. People will see a $1 billion company or hear that a company made XYZ in profit, but that profit is money earned that has to go to pay bills, pay for materials, export and import costs, salaries, the benefits for the employees, and the benefits for their dependents, doing research and development for new products, customer surveys and focus groups, marketing and putting new products out there, accountants, lawyers, lawsuits, and so many other things. So when you look at the money that's left, if a corporation does have surplus, then there's no room to raise minimum wage or raise the salaries of these employees to $15 an hour. So um, I'm trying to build a case now for where I see the dollar going for the rest of the year and for where I see the US standing in December. So if we do raise minimum wage to $15 an hour, more jobs are already trying to move towards automation, but those that haven't will be forced into automation. Companies like Amazon, they already have grocery stores. I think I've mentioned this before, where you can walk in and you don't have to have a cashier. You just, put stuff in your basket, scan it, scan your app, and you walk out. Japan has set a really good example for the US to follow because most things there are already automated. You can buy food, hot food, out of a vending machine, and it gets loaded and like all of that stuff. Okay, so that's the job situation. Just kind of keeping your mind like, okay, $15 an hour, lost jobs. And then also keep in mind that $15 an hour means increased product cost in addition to the 2% inflation that's already going on every year. So that means your dollar is not going to stretch as far. All right, so moving on to some articles and some things that are going to help build a case for the value of the dollar. So part of the Democrats' plan for the stimulus is to do a 1-year plan that will give $3,600 per child to households. So this will be anywhere from $250 to $300 a month for every child that a person has for a year. So essentially what will happen is instead of the person getting the earned income tax credit for kids on their tax return in April, they will be getting it throughout the year. So I know some of you have probably heard about people getting tax refunds that are like into the thousands of dollars because they have kids and can write them off. Well, that money will be given to them throughout the year with this plan. So what case am I making for this? Is that this is printing money. It doesn't, you're not, in the sense of printing money, it's not actually being like physically printed, it's just being created out of thin air, because this is about, depending on the family, or depending on the age of the child, I should say, it'll be anywhere from $1,000 to $1,600 more that the U.S. is having to pay out per child than what they normally would have, because right now that credit is $2,000 per child, and it's paid out on the um, during tax time, so it comes in the form of the tax refund. So this is money being printed. So $3,600 per child per year. So I think all in all, that part is about $117 billion that's going to be printed. So this is another part of the Democrats' plan, is to cancel student loan debt. It's also another form of printing money. And some people have said no, cap it at 10,000. Others have said no, raise it to 50,000. Whether it's 10,000 per person, or 50,000 per person, it's still printing money. It's still like billions and trillions of dollars that's going to have to be wiped away. That's not going to be paid into the banking system. So all these people who have underwritten these student loans, people who've given out the money, like the actual creditors themselves, the government is going to have to literally write checks or just transfer all this money back to them to make the person's account zero. So this is also printing money. Also in these stimulus talks, it's just a lot of stuff. It's just a lot of stuff that they want. They want like SNAP benefits increased, and they want um COVID relief, and so let's just go back to the whole monetary amount instead of just breaking it down right now. It's $1.9 trillion. So $1.9 trillion is going to be printed. It's going to be um, new zeros and ones created in the bank account, transferred to people, transferred to banks, transferred to institutions and whatnot, to either clear debt, give people money, give people stimulus, give them their child income, the tax credit. So what I'm trying to say with the dollar is that all of this printing, and this is just the first stimulus package of the year, because Joe Biden has already said that he wants another stimulus package in the fall. So this is just money printing. And as we know, every time you print money, it's diluting the dollar. It's taking value away from the dollar. So back to what I was started with, is that person making $15 an hour now. Let's say they did get the job, they're making $15 an hour, great. But product prices increased by 10% just because the company's now having to pay more minimum wage. And then inflation on top of that of 2%. So that item's now 12% more in cost. 2% naturally through inflation, 10% because of wages. So now you're making more, but you're also paying more for items. But now your dollar is worth less. So in addition to, inflation eating up your dollar, now all this printing of money that the government's doing is taking away value. So not only are you not able to stretch your dollar, but now you don't even have that much of a dollar to stretch anymore. So what am I trying to say is that all of this stimulus printing, all these packages that are being pushed through, it sounds good. Sounds really good, because you're thinking, oh, I'm about to get this money. But natural forces in the market are going to eat up that money. So you're really not getting anything, because if you look at how wages have increased over the years, product prices have increased more than wages. So people still feel like they're not going anywhere or getting ahead. You're going to have people 10 years from now say, well, I thought I was getting ahead, but, you know, I wasn't, and I don't even know what's going on. And that's, because you have to understand the natural forces of the market. So that's that. Also, another thing, because I just have a slight feeling that a lot of people are going to be talking about this on their social media tomorrow, so I just wanted to go ahead and kind of address the issue, is that the NTSB is going to be releasing the final report on the helicopter crash that killed Kobe Bryant, his daughter, and roughly like 5 to 7 others that were on the helicopter, including the pilot. So, one thing as a preliminary that we already know about this is that it was not engine failure. So, if it wasn't mechanical and it wasn't engine failure, the next thing is the pilot. So we'll see. We'll definitely see. If anybody reads it and you need some information, or you're trying to like figure out what in the world are they talking about, um, I'll let you know. I'll help you through all of that. But one thing that they have said about this whole incident, flying in fog in a helicopter that's not instrument rated is not a good thing. Instrument rated means, like, think about being in your car and um, trying to get somewhere, not being able to see out of your windshield, and not having a GPS and not having lights in your car. You're just driving in fog and it's dark, like you can't see. Like, you need instruments in a helicopter, you need instruments in an airplane to be able to navigate. You don't have roads in the air, so there are a lot of instruments that help you to know where you are, where you're going. And if you're flying in fog and you can't see the ground, there are additional instruments that you need to help you to navigate. Those additional instruments this helicopter did not have. So yeah, I just wanted to give you the heads up, because that's a very sensitive issue for a lot of people. And it's going to be flooding social media tomorrow after this report comes out. So yeah, just wanted to put that out there. Um, while I still have your attention, thinking about some stock plays for you guys. Um, there are a lot of stocks that are coming out with earnings at the end of this week. One of the important ones is Disney. Because of the reason I mentioned earlier, some of these amusement parks have been given the green light to actually open up again, and they can only open up at about 25 to 30% capacity. So those are things we're going to keep our eye on. Also, with airline stocks and stuff, we'll be keeping our eye on those. In addition to airline stocks, and kind of tying it into this, news story, I want you guys to kind of be aware of for tomorrow. When these airlines start talking about putting planes back in the air, we have an airport here where they have like 27 Boeing airplanes from American Airlines that have been sitting. Um, American Airlines is paying the airport to kind of rent out a whole runway to park these planes, and they're just sitting there. So that's 27 pilots that are not flying. When pilots don't fly, it's just like anything else. You kind of like lose a little bit of your skills. People can say, well, pilots can still use simulators. I use simulators every day trying to learn how to fly, and it's not the same as being in the air. Your situation awareness, knowing where things are, reacting in an emergency, you can't really do a whole lot of that in a simulator. You can try best you can, but you really need to be in the air. A lot of these pilots, especially in the UK, haven't been in the air in like a year because of shutdowns. So keep that in mind. Um, Whenever we start talking about airlines, when we start talking about them getting new airplanes and flights resuming again, for your own personal safety, and just for checking out stocks here and there. All right, so I'm done. I'm gonna go ahead and turn it over to Mr. Levels and let him get started.
Cool beans. Appreciate you, Carmen. Great job as always. Cool beans. Alrighty. Let's jump right into it. As always, we start with the dollar. Look at the dollar and see how price opened up this week. Here we go. All right, so looking at the dollar, we can see that price opened up to the downside. We had to give us a little slight pullback, then we broke back below the opening. And now we're steady pushing down. If we look at last week, all last week was bullish except for Friday. We started to pull back Friday. So looking at last week, this is last week's low. I erased the markup that I had on here, but I do want to see the dollar come back down, retest this structure here at this engulfing candle, come back, and then continue to the upside. So I do expect the dollar to keep selling off to start the week out with. So let me look at it on the hour one more time. Yeah, so I want to see her come on down here. We got some imbalance right here. So I at least want to see her come down and retest here. Possibly this price level here, this blue structure. And then continue to the upside. So with that being said, let's look at our currencies. We already know that our currencies move in the opposite direction of the dollar. So if we're going to be bearish starting the week out with the dollar this week, then we're going to be bullish starting the week out with our currencies. I'm liking this price level here. That price just checked. That was a good retest. That was one touch. Price come back down and give us another touch off of that level. I would take Euro USD for the buy to come up and retest this high. That's 50 pips. That's a good play for the start of the week. Could see Euro USD come up here. Take out these equal highs. A lot of liquidity sitting right there. So we could get a good run on Euro USD this week. Could see price come back up here and retest this 1.22 level. That'll be about a 185 pip play. So we'll see. Looking at GBPUSD, she been trading sideways real good within this trading range here for a good little bit now. So she's back above this price level. So if the dollar keep pushing down to start the week out, we should at least get this bullish push to the upside out of GBPUSD. I will wait for her to come back down, test that level one more time, take her up to this next level. That's about 50 something pips too, just like with EURUSD. That's a good play to start the week out with the pound. Looking at NZD/USD. If she break to the upside, then that would be good play to the upside. Yeah. So that's what we'll be looking at with our currency pairs to start the week out with. Let's check out silver. Silver came down, gave us that test of that level, gave us that buy off that level that we wanted to see. Now we're back at this structure. Let's see. Silver. Let me see some. See if we can see silver extend to the upside this week, at least to start the week out with. We see the dollar pushing down. I want to see the dollar come down and retest last week's low, which was here. So that's a good little drop. I want to see it come down, at least down here. And then we could see a pop to the upside, but I at least want to see to start the week out with, see the dollar sell off to start the week out with. So we should see silver buy up to start the week out. Gold already pushing with some momentum. See if we can get gold to break this structure here. Give us a retest. And then I wouldn't mind seeing gold go back up to 1870. Gold get here and respect this level though. We can see gold come back down and retest 1785. See how many touches we got out that thing. So that's what we'll be looking at out of gold to start the week out with. Let's check out U30. I want to see is we gonna get back above this high. If we don't get back above this high, then I gotta drawn out what I think U30 gonna do. If we don't get back above this high, I want to see us get below this gray structure. And if we get below this gray structure and we respect this price level at the bottom of this gray structure at 31,290, then I expect to see US 30 come on down, filling this imbalance for this week. But we got to be patient and wait and see if U30 break above this high. If we respect this high and don't break back above this high, and we start to see U30 make lower lows and lower highs, once we get up under this great structure, we're going to wait for that retest. And if price respect that level at 31,290, we're going to take U30 all the way down to 30,800. Simple as that. If we break above, we gonna wait on this retest off of this kill shot. And then we will go to the upside. So we gotta be patient. Ghost, do you got anything? You got anything, bro?
Yo, can you hear me?
Yep.
Yeah, same thing. I was looking at the DX. I got the DXY, and as far as U30, let me share my screen right quick. Let me share my screen. Give me 1 second. Ooh, this me right here. Yeah, I think this is me. Yo. All right,
Yep.
my screen.
Yep.
Well, as far as U30 go, it's been holding this 4 hour uptrend, and I just been buying. I just start staying away from the sells because every time I'm waiting for it to sell off, this thing just keep climbing and keep climbing and keep climbing. So I just been like treating it like Bitcoin and buying a dip, because if you're not really too experienced, I don't know. I got it coming down soon, but it's just like until as long as it's up until it's down. So I'm gonna just keep buying it off this level. I'm looking for it to come back on this level, and I'm gonna retest, and I'm gonna be patient, see if it makes any more candle formations to take it back to the upside. To be honest, until it shows me something different. Because it's just been going up. As far as DXY, I know it's about to hit. Is it DXY? Let me see. Was it DGI? Excuse me. Hold on. Ooh, was it the D? What was it? So, hold on. Give me a second. Yeah. I know it's coming down, but it's really been respecting this uptrend right here. So I'm waiting to see how it plays off of this. If it's going to give me some kind of formations, or is it just going to bust straight through, because it's been respecting this upward trend. Every time it touches it, it's been taking off again. So I'm just waiting to see. Those are the two I've been looking at, to be honest. Of course, Bitcoin, like you say, buy the dip. I'm just waiting to see how the DXY treat this, respect this trend line like it's been doing ever since. Every time it touch it, it's been going up. And U30, like I'm not even shorting it till I see a clear breakout, because as you can see, all of these shorts right here has been short. It's so easy to get caught trying to short it because it just keeps pushing straight up. Until they show me something different, I'm gonna just keep waiting for a dip and buying, because it just, I got caught a couple times being greedy on some sells, and and it's been taken away from my profit or my buys. So I'm just going to until it shows me, like you said, till it breaks up under here and shows it can't push back, I'm just going to keep buying. I'm just going to keep buying. But that's all I got. Watching the DXY, watching U30. I mean, it's up until it's down for me right now.
Cool beans, cool beans, cool beans. That's what's good. That's what's good. Great analysis, my brother. Great analysis. As we know, there's no right and wrong analysis. The market does what it does. Only thing you could do is try to do the best analysis you can do, and look for all of your confirmations. And once you see your confirmations, then if your confirmations match up with your analysis, then you take your trade. But there's no right or wrong analysis because the market could go in whichever direction it chooses to go.
You just gotta be ready to get on a ride, right? We gotta be ready to get
Yeah,
on a ride. That's it,
that's
man.
right. That's
Just
right.
ready to take the ride.
So yeah, man, we appreciate everybody tuning in. Does anybody got any questions?
Yeah, I got a couple.
Cool beans.
I just wanted to go back to your Euro USD and your GBP USD. For the Euro USD, can you go back to saying what price you wanted to see it go back off? I know you said it broke, but you wanted to see it retest before it does the big buy. I just wanted to get the level you said that you wanted to see it bounce off of, and then the TP that you were looking for it to go all the way up to. And the same with GBP USD.
So you said Euro USD and GBP USD?
Yeah.
Okay. Can you see my chart?
Yeah, I see it. Mm-hmm.
All right. So with Euro USD, I wanted to see it come back down and retest this level here at 20.30. I mean at point 2037.
2037. Okay.
Yeah. The way it's pushing, it's probably gonna come up retest here first before it comes back down, because it just got this push down. So we'll probably see it come back and then come back down,
right,
and then give us that push up. So that's what I would be looking for. Stop loss would of course be below here.
Okay.
And GBP USD.
And what was the TP you were trying to take it to? The Euro USD?
I would take it to the top of this high right here. Point 2130.
Okay, cool.
GBP USD. She looked like she just might keep on pumping.
Right.
Might have missed this one, but if she do come back down, retest, that level is 0.3742.
3742. Okay.
And that take profit is 0.3794.
Got it.
Both of those are 50 pip trades.
Okay.
Bro,
Yeah.
Bro, you still got me in?
Yes, sir.
All right. I just was something I noticed about the EU and the DXY, since they were opposite, correct?
Yeah, you gotta share your screen again.
Oh, okay. You see it? They're both like this. The EU right here is at the top of this trend channel, and it's been reversing off of this trend channel every time it touches, as you see up here. And right at the same time that the DXY is about to touch the bottom of this trend channel, where it's been reversing up. So I'm really curious to see if it's going to push through both of them, or if it's going to turn around, meaning USD, EU come back down, or is it going to, push through? And is the DXY going to push back up? So I'm really just watching these areas right here to see how it's going to react, because it's about touching these channels at the same time right now. I think that's important to be mindful about.
Absolutely, absolutely.
Because these are definitely have been reversal areas for these pairs, and they're both EU is actually touching it already, and DXY is getting close. Is getting close to it. So, I'm definitely watching that before, see how it reacts, if it's going to be a fake out or if it actually pushes through or turns, before I make any move on those pairs. I believe I didn't look at GU, but I believe it might be in the channel. I don't know. It's not really in that same kind of channel. It's not really that clear. But I know EU and the DXY is. So I would just tell y'all to be mindful of these little at these trend channels right here, because they've been holding true to these channels. So just to be mindful when you take your trade. That's about it.
Absolutely, absolutely. Anybody else?
Yeah, real quick question on analysis. You said when you do an analysis and you watch the market, if the market follows pretty much what your analysis is, that's a good sign. But if it doesn't, that becomes a learning lesson, doesn't it? Basically.
Yeah. That's why you keep your journal, and you journal like, your trades, and whenever the market goes against you, you make note of that. You know, make note of if it was something that happened in the news, or was it just you was just flat out wrong and just on the wrong side of the market. But yeah, it's always a learning lesson whenever you lose a trade.
Yeah. Okay. So in reading it, like you just mentioned, that no analysis is wrong or right. You just, when you look at what really happened, that's the answer right there.
Yeah, that's the answer. And
Right.
you just make note of that, and you make note of the pattern that the market created. You know what I mean? And you make mental note of that. So then the next time you run across that same pattern in the market, or that same situation in the market, you'll know how to react to it.
So I'm really building a library, is what we're
Yeah,
saying.
that's what it is.
Okay.
Yes, sir.
I'm good.
Cool beans. Anybody else?
Yeah, quick question. I'm always gonna get a question in. So for US 30 and the dollar and all this, Carmen's talking about a bunch of money printing and stuff like that, and inflation and losing the value of the dollar. At what point do you think, you know what I'm saying? I mean, this is a very theoretical question. Are we gonna see that bubble burst? You know what I'm saying? Like right after 2009, 2010 area, whenever we had the last recession, and then we had that huge spike right after that. Then you saw a bubble burst again, like a secondary bubble. You think we're gonna see something like that again, and then how it would trickle down, affect all these pairs and US dollar and stuff?
Yeah, we'll definitely see something like that again. When, I wouldn't be able to tell you exactly when, but we'll be able to see it when it's about close to that time. It's certain indicators, um, it's certain market indicators that we'll be able to identify to be able to tell that it's getting ready to burst.
Okay, so we just patiently waiting is what you're saying.
Yes, sir.
All right, appreciate it.
No problem. Anybody else? Cool beans. Well, as always, man, we appreciate y'all tuning in. Let your family and your friends know you love them while they still here. Everybody have a great night, and peace and love, everybody.
Later.
Thanks a lot, Hotep.
Good night.
Hotep.
All right, everybody.